Earlier today, we just got some groundbreaking news of a massive insider selling at SoFi. Their fourth largest shareholder sold out of their entire position, liquidated every single share of SoFi. Ironically, this comes on the same week when the CFO went on a Fireside and talked about some pretty bullish catalysts for the company in 2026. Obviously, however, it's not what we want to see when you see massive liquidation for SoFi stock, especially when the stock is trading under $7 a share. It lends the question, what is going on with SoFi stock right now? Let's talk about it. Okay, so I'll start off the video in chronological order and I'll try to include some news that happened over the past week as well, as I'm consolidating basically the last 2 weeks of news into a single video. I know I haven't done these videos for a couple weeks simply because there's not been enough news to talk about, but for this week, that changed, especially with the news piece that was released earlier today. So I talk about SoFi news every Friday, or at least I try to talk about it every Friday if there is news to talk about. If you do enjoy this series, subscribe to the channel for more. So as always, I do start off with the stock price action and go from there. SoFi has been fairly flat from a stock price action. It's been down 2% over the past 5 days. It shot up on Wednesday a little bit and then gave up all of those gains and then some throughout the day today. And if we zoom out, SoFi is down 9% over the past month and it's down 30% year to date. Obviously not what we want to see. They closed off today at $6.80 as of this recording. And the reason I'm recording this on a Thursday night is just simply because I won't have a chance to do so tomorrow, but I suspect the weakness in the stock price will continue into tomorrow as we see more of this insider selling. Moving on to the news, SoFi appointed a general counsel last week. They named Steven Simcock as general counsel, succeeding Rob Levette. Simcock brings decades of experience from JP Morgan Chase and Citigroup. It's not really major news, but it's good to see that they have some credible candidates for these roles, although that's not really been an issue for SoFi in the past. They're able to attract some top talent. However, it is also interesting to see that just in the past 3 months alone, how many changes there's been in the executive team and also high profile members in the company. We've seen Chad Borton, we've seen Aaron Webster, we've seen a couple of other members over the past 3 months alone. Over the weekend, I saw the SimilarWeb website traffic for SoFi, which had declined 8% in the month of May, accounting for 1.3 million visits less than the previous month. And I made a post on this on X with my thoughts in the moment. And I basically said that website traffic doesn't have a strong correlation with member additions. And if you've been on this channel for a while, you've heard me say that before, even when the numbers for website traffic were going up. One of the members in the SoFi community, Tim, also commented on this, saying that SoFi is slowing down lending. They're likely to slow down their marketing as well as a result of that. And that's what we're probably seeing here, because we know that sales and marketing expense is essentially a lever that the company can pull at any time to artificially increase or decrease that awareness around their brand. And they usually do this when they're targeting high member addition quarters or when they're seeing some changes in their business. If they're focusing more on profitability, for example, or they want to tame those expenses, you'll see this happening. However, the main news came on Wednesday. We had SoFi participating in a Mizhuo Fireside chat. Their CFO, Chris Lapointe, was hosted by Dan Dolev, the analyst from Mizhuo. I covered this event live on Wednesday alongside Tanner, where the chief financial officer, Lapointe, reaffirmed the company's 55 to 80 cents EPS guidance by the end of 2026. In fact, I even made a post on X, noting that analysts are expecting 8 cents EPS for 2024 as a full year number. And if we take the high end of the forecasted range by SoFi management, we could be looking at as much as a tenfold increase in the earnings per share in just a mere 2 years, which is absolutely staggering to think about. It's also worth noting that analyst guidance for 2026 for SoFi is really low. It's actually far below the range that management is actually guiding. So it's really important for management to keep reaffirming the guidance numbers, because what it does is it reaffirms it in analysts' mind and eventually it gets them to increase their expectations for what SoFi could look like in 2026. And on that guidance post, I also saw this post by Frugalbuck on X, who pulled the transcript from that event. SoFi's Chris Lapointe basically sandbagged the guidance. Quote, "The guidance assumes no incremental investment in new products, new services, and no acquisition." So they're basically saying, if we don't do anything new from now until 2026, we're going to have 55 to 80 cents EPS just from that linear growth path that we're seeing. But then he also added, "Our product pipeline is pretty robust. You shouldn't expect us to sit around and not come out with new products." So basically, he's saying that if we have nothing, it's going to be 55 to 80 cents, but we're going to have something. So presumably we can expect it to be even higher than this range. Now, Roy made a great post on X compiling some of the main points made by the CFO, Chris Lapointe, on that Fireside. And let's just take a look at this post, skimming it for a couple of interesting statistics. 90% of member deposits are direct deposit. SoFi's banking license allows them to save about $500 million worth of interest. 30% of new members take out a second product within 30 days of being on the platform, which is fantastic from that flywheel perspective. Financial services, 50% CAGR, lending, mid-teens CAGR, lending as a service up to 50 million annual run rate. And the next point here, the CFO mentioned that they're declining 80% of applicants right now from their lending perspective in an effort to be conservative. Now, there's really 2 points that I want to mention here. The first being that even the loans that are declined are referred out to partners, and SoFi still gets a cut of these loans. So it's not like they're just leaving money on the table. They're leaving some money on the table, of course, because they're measuring that risk, but they're referring these loans out. They're getting a referral bonus in return. The second point that I want to mention here is that in a higher rate environment, the main concern for the company like SoFi is default. And with them being so incredibly conservative, they're providing loans to 20% of all the total applicants. It cuts the risk of default down significantly because essentially they're over indexing on safety as opposed to profit. Of course, this cuts both ways because the moment we see macro environment becoming more favorable for SoFi, they can ramp up that lending environment by loosening some of those restrictions, which really makes rate cuts the primary catalyst here for the business. And rate cuts will be coming down towards the end of the year. In fact, we also got CPI numbers, but I'll touch on that in just a second. Let's finish off this post from the CFO, Chris Lapointe. Roy continues in his post. Home loan business market share is less than 0.1%. So the runway is incredible there. Student loan refinancing is a $12 billion origination opportunity per year. So basically, they're saying we have all of this runway that we can grow. We're just being really careful. And with regards to our favorite conversation, the tech platform, Chris Lapointe mentioned that the RFP discussions are with many of the top US banks right now, and the conversations are going extremely well. We're seeing a very robust demand and are in great conversations with a number of top banks in the US and Latin America. It can take 1 to 3 quarters to sign up a client, and then integration takes longer than that, and then you can start generating revenue. So when you're thinking about a possible SoFi Citibank partnership or SoFi US Bank partnership, think 2 years, where essentially the numbers that we're seeing for Galileo today are deals that were started in 2022. And the numbers that we're going to see for Galileo in 2026 are deals that are being talked about today. So you got to take into account that huge variance in terms of the time it takes for these deals to be validated. We can't really judge them on the Galileo deals because of that long life cycle. Now, coming back to the rates, on a macro perspective, we got news on CPI and a Fed statement on Wednesday. So April CPI rose 3.3% over the last 12 months versus the expected 3.4% that the market was looking for. So this is good for SoFi, right? Especially their student loans and their home loans business. As rates fall, those businesses will do very well. Loans are much less likely to go on default as inflation comes down because high inflation can essentially lead to default, especially with lower FICO borrowers. Now, as a result of these numbers, the Fed kept interest rates unchanged at 5.5%. And here, if we look at the dot plot, we can see that the Fed forecast is signaling just one rate cut for 2024. And this is obviously going to have a big impact because going into the year in January, we were expecting something like 4 rate cuts or more. So obviously, if we have just one rate cut at the end of the year, SoFi is somewhat in a limbo state. Now, from Lapointe's comments, we know that student loan business is going to be huge. We know that the runway is there. And really, that business is dependent on how quickly rate cuts will come. And we know it's going to be towards the end of the year. However, on the flip side, we know that SoFi is going to beat their guidance for the full year because the underlying assumptions in their guidance assumes a much worse macroeconomic picture than what we're seeing actually play out. Rate cuts are really, in my opinion, the major macroeconomic catalyst for SoFi. And if those are pushed back, then we can see the stock being somewhat in a limbo state until the end of the year. Finally, just earlier today, our main piece of news, the Qatar Investment Authority filed a Form 144 to sell all of their stock in SoFi. They're liquidating their entire 19.8 million share position worth $139 million. Now, this is about 2% of the entire company, and it's significant because if you remember, the QIA was one of the main players in the warrants discussion back in May, which expired worthless. So if you remember, we talked about this. The Qatar Investment Authority held 11.3 million warrants, which basically expired out of the money on May 19th. The reason for this was because those warrants could be exercised at a 1-to-1 ratio at a price of $8.86. But since SoFi stock was trading at the mid $7 range, those warrants expired worthless. And so, as a result of that, the Qatar Investment Authority obviously didn't convert those warrants into shares. And yes, it's good for SoFi because they essentially avoided about 1% dilution with those warrants not being exercised. But I also think it might have something to do with the QIA selling out of SoFi completely. And this is significant, right? Because the QIA is a pre IPO investor. They're the fourth largest institutional holder of SoFi, and they have a seat on the board of directors currently. And so if they're selling stock and dumping their entire position, that's obviously not great for SoFi because over the next couple of days, we're going to see selling, we're going to see weakness in the stock as all of these shares are dumped into the open market. But I also think that sentiment is fairly low with a macro catalyst being towards the back half of the year and with the stock price action being at $6.80, and you see very low liquidity, very low price action movement, and now you see massive insiders selling out of SoFi stock. That's definitely not great. But the silver lining is from a fundamental execution perspective, from an underlying business perspective, a lot of this news is just noise, right? Nothing has changed in the underlying company. Essentially, the shares that are going to be sold today, tomorrow, and over the next week by the QIA, they're going to be picked up by other investors, whether institutional investors, retail investors, and the like. So I don't think anything has really changed. It's just shares trading hands. It's just the gravity and the magnitude and the quantity of the shares makes headlines. But SoFi as a company is still chugging along on their mission statement and on their vision. Anyways, I hope you enjoyed this video. I'll try to talk about some more recent events in SoFi if I see them around. If there's any news on Friday that I couldn't cover, I'll talk about tomorrow in the SoFi Weekly podcast at 10 p.m. Eastern on this channel. But those are the main pieces of news that I saw. If you do enjoy this type of content, subscribe to the channel for more, and I will see you next time.